Hello and welcome to Pro Trader Strategies Market Commentary for Friday, February the 9th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. I'm going to go over a couple of these industrial production numbers. Although it's not the flash estimates and things of that nature, it is still coming in pretty good across the pond. So French industrial production came in at 0.5%, expected to be 0.1%, and they revised last month's number up from negative 0.5% to negative 0.3%. Good number there. Industrial production in Italy came in at 1.6%, expected to be 0.7%, and they revised last month's number up from unchanged to 0.2% increase. That's good. Great Britain came in at 0.3%, expected to be 0.3%. And then all the way back here, let's do one more. Great Britain's industrial production came in at negative 1.3%, expected to be negative 0.9%. And they revised last month's number down slightly from 0.4% to 0.3%. That's the only one that really doesn't look too good. And, there could be a good argument to be made for French and Italian manufacturing does not really account for very much of the overall European manufacturing sector. It's mostly Germany, to be quite honest. And then here in the United States, we had wholesale inventories coming in at 0.4%, expected to be 0.2%. So an increase in inventories there, not always good, but there's a lot of other things that go into that number that I've talked about many times before. We don't know if they're building up because they expect future demand, and they're just kind of building up inventory in ready for that. The other thing is if they continue to think that it was going to increase and they were increasing in inventories and they can't offload those, then that is not a good thing. So it's a really kind of a sticky number to really dig into. All right, let's look at the overall markets. Continuing the bloodbath in the overall equities and the markets in general. As you can see with the crude oil futures down over $1 right now, coming down to test this 38 Fibonacci level that I've been looking at. Once it blew through the 50-day moving average yesterday, all bets were off that it was going to even be able to hold itself up, and we've come down to look to test this 38 Fibonacci level. Now that coincides very closely with USO trading around 12. Now yesterday I was talking about how I was going to ride USO down to 12 and cover my 12 puts and my 12 and a half puts that I am long in both my margin, or I'm long the 12 puts in my in my margin account. In my IRA, I'm only long the 12 and a half puts, but I'm also long those same puts in my margin account. I'm going to kind of ride this out for a little bit because the overall market does not look like it is looking to turn around anytime soon. If I get much of a bounce off of this 38 fib level, I might look to cover that. But I'm going to hold on to it at least for today, kind of watch it. I'm going to have an itchy trigger finger on it nonetheless, but I am going to let it ride out because of what all kind of transpired yesterday that I'll talk about here today. But I need to ride these out just a little bit more, give it a little bit more breathing room until I see some kind of base or some kind of support, which this 38 Fibonacci level is likely going to act as a pretty big support. As you can see, it acted as a pretty good resistance several times before when we were trying to trend up, but now it's going to definitely act as support here. But if we get below that, it could get really ugly really fast in crude oil for a lot of economic reasons as well. All right, now gold. Gold's trying to find support here. With the overall equities coming off, this is a flight to safety trade, right? This is where you put your money in order to ride out the storm, if you will, in the equities. So a lot of people would generally come to gold futures quite fast, but they're not really doing that. It's only up 50 cents right now and having a lot of trouble getting through this 78 Fibonacci level. So I was really, after yesterday when we kind of broke down really low, broke down below the previous day's low, I thought we were definitely coming down to test the point of control right there at 1280. It's not quite yet, but this is looking pretty bottomish right now, especially if this turns green. Then on to the Bitcoin futures. They're trading up about 140 points, as you can see here, trading around 8,420. This market's moving sideways, and I kind of was looking at an overlap chart of this. Bitcoin is following pretty closely lockstep with the equities. So you kind of put their charts together and they are kind of moving at the same pace. Whereas one would think that Bitcoin would be kind of like the currency or gold, where that would see upward pressure when we see downward moves in the equity. So not really seeing that. It's kind of running lockstep with it. So it's definitely not a safety trade by any stretch of the imagination. Now, bonds haven't gotten quite as low as yesterday's low of 143.20. We are very close, but this is to the point of looking like we are finding some tweezer bottoms here on this market. So the bottoms, the lows are very close to each other, almost enough. It's basically a couple of ticks away from it. 20, actually, they both came out 20 on the low. That it is a tweezer bottom. So this is 143.20 today and 143.20 yesterday. Tweezers bottoms, especially when you get this setup here, is looking very bullish. Tweezer bottoms are hard to break through, and that just came down there, slammed, and popped back up. So maybe seeing a change in sentiment here, where we've gotten the correction in equities. Bonds have continued to come off because of the Fed speaking about 3 more interest rate hikes throughout the year, but this may be just a little overdone to the downside. So we're going to have to keep an eye on that and maybe look for a bullish play in the bonds. Now, VIX moving higher, 34, up in the 34 handle. I'm really kind of surprised at this lack of explosion in VIX. I mean, 30 is an explosion, but yesterday when I was talking about in the daily market commentaries, there was only like maybe 3 or 4 stocks that were in the level of 100 ID percent. Now today, I'm looking at my watch list, and I probably have 30 stocks at 100 IV percent. So everybody really experiencing high IV right around earnings. That kind of exacerbates things. That's good for options trader for the most part, if we expect volatility to settle down. Now, I expected volatility to settle down a little bit early, and I got caught. So that's what happens when we're trading. I'll go into that a little bit more. This is like, I look at the way that the markets are trading right now, and it's always reflective of a boxing match in my eyes, where you're kind of the little guy and you're going up against a big guy, and it doesn't matter how big you are, but you're littler than the big guy, and you don't want to get hit by him. So we're taking jabs here. Now, I've taken a couple roundhouses from this big guy in the last week or so. So the guy's gotten me up against the ropes. Now it's time to battle my way back. And I've got to do it by throwing jabs, throwing a couple uppercuts. I'm not going for the roundhouse knockout punch. I'm going to slowly come back at him. It's kind of like, I'm going to date myself, Mike Tyson's punch out. When Mike Tyson would go in against that big guy in the final match, the bottom line was you had to not get hit by that big guy and start going in there, throwing some jabs, kind of working down slowly, stay in there, and slowly wear him down. And that's really what we're doing here as a trader. Sometimes that big guy thumps you, and you got to get in there, get your bearings, start boxing back. That's where I'm at right now, because when I saw this bounce, I started getting long deltas by selling short puts. That obviously didn't work out, especially when we kind of blasted above this. I thought I was home free. Volatility should come out. We're going to kind of rebound. That didn't happen. As you can see yesterday, I was keeping a close eye on this yesterday, and the market just started sloughing off. Second half of the day, I was basically chasing this market, trying to get out of all of my short puts because I was expecting this to rally. Never got there. It was pretty much a day open straight down. And that's why I pulled the ripcord on just about everything. NASDAQ continuing down lower today. The next stop is looking like the 200-day moving average. There's not a whole lot of other support levels there. As we can see, the E-mini S&Ps is approaching that quite rapidly. Came down, earlier this week. It touched that 200-day moving average and bounced away. Today we're going to go and retest that. It's not going to probably act as much of a support today as it did previously in the week, and we could easily see this start to come off. We need this market to really rally back hard to at least where we opened in order to make this look like there's any type of bottom going on. And we probably aren't going to really see that till later on in the day. This is the 30-minute chart of the E-mini S&Ps. These are 30-minute candles. As you can see from the open, for the most part, we tried to rally on the open, but then boom, there has been not a green bar since that point and very near the lows of the day right now. So overall markets continuing this bearishness. So I'm glad yesterday I basically puked out of some of this stuff. And XOM with ExxonMobil, you can see this is a bloodbath in here. Nothing you can do. This is just, the market is beating the probabilities, and that's going to happen every once in a while. Right now, the market is really crushing the probability guys, and the market making new lows today. Anyway, on with ExxonMobil. In there, I had on the March 80 puts, and I sold them for 81 cents. I had to buy them back for $5. Ladies and gentlemen, this is going to get ugly. This is probably one of the worst trading sessions that I've seen in quite some time. But sometimes you got to rip off that Band-Aid, retool and die, start fresh with fresh eyes. My market assumption was absolutely wrong, and there's nothing I can do about that. I just have to move on with my life and go back. I was already down at the beginning of the year, fought my way back in off those losses. Now, I'm going to have to start fighting back to get into positive territory again because of some of these losses, all right? Next one is WYNN, ripping off the Band-Aid in WYNN. I talked about this a couple of days ago when I put this on the pop. I thought it was going to be a little bit longer lived than this without Steve Wynn. I don't think Wynn Casinos is the same thing. I think the market's starting to realize that as well, although this is going to act as support. I don't want anything to do with these stocks if everything is going to come off. These are going to be ones that are going to get decimated as well. So I had on the March, was short the 155 puts in there for $1.86, bought them back for $3.60. So not too good on that one. Gilead, I actually made a mistake in here, and I was short the March 75 puts for 71 cents. Now, I had done this as a small tranche, but in my moving back and forth, I was just checking. I, didn't check the size on that. I was really kind of trying to get out of everything quickly and just assumed that I had on my same tranche as normal, but I had on a half a tranche, if you will. So on those 75 puts, I sold for 71 cents. I bought them back for $1.83 and mistakenly bought back a half a tranche for $1.83. So now I'm long puts in Gilead. Don't really, this isn't part of any of my rules for trading. This was a total mistake. I've been making good mistakes though lately, and clearly today this was a good mistake as well. So Gilead on the downside, trying to help me make back some of those losses because right now, last I checked, I think it was trading around a what was it, a dollar? It's trading a little higher than $2.71. So bought them for $1.83 right now. It's trading about $2.70, $2.80, and so that one kind of turned around on me and worked out pretty well because pretty much made up all my losses in that reverse, which was a mistake. But sometimes I'd rather be lucky than good, and this seems like it's the month for making mistakes that turn into gold, because my IRA for the first time ever, I think, is up higher or up more than my margin account. And that's easy to say because my IRA hasn't had really any losers. And I had on all those puts and things of that nature that I put on for free. And those are the ones that are really paying out. So really kind of screwing with my brain that I might actually start doing some of that a little bit more often, where I just throw on those free puts, if you will, when I'm doing these defined risk strategies, and just leave the longs on to let expire. It may happen once in a blue moon, but that's when they start paying off. So All right, SPY, another one I ripped off the Band-Aid in, and I was short the March 255 puts in there for $1.63. You know, it was like a $7 down move in SPY yesterday, and that was a one-day move, and I have 35 days. I was like, I'm out of this one as well. Originally sold those for $1.63, bought them back for $6.38. Another ugly loss in there, but like I said, I'm going to wait for this market to turn around, jump back in. XLU, the last one that I kind of covered for a painful, it wasn't really as painful as like SPY and XOM, but I had on the March 47 puts in there, sold them for 61 cents, bought them back for $1.09. So all done with those, out of it. Basically all of my long deltas, I'm out. Really short deltas, basically left over. I'm short deltas in Gilead, USO. I'm going to leave on for a little bit, let those breathe, and gold, which I'm long a couple of puts in there in my margin account. Those aren't working out too well. I wouldn't really expect those to with the overall markets moving lower. We would expect that to move higher. And then done nothing really in my IRA because all of those long puts that I have on are still working out. So like I said, you know, those USOs, glad I covered only half of them yesterday in my margin account. Today, you know, I sold those for 60 some cents yesterday, today trading 93 cents. So still letting those breathe. And that's all I got for you guys today. You know, it's really important. We all make market assumption mistakes. The bottom line is get out of them. Once you get out of them, don't let your mentality switch that you've got to get that money back immediately. It's not that. It is a long game here, guys. We are looking at the long haul, and we're going to have these market corrections where it hurts us. But the bottom line is you don't go for the roundhouse. Don't go for the home run. Those are not going to pay off now. We've seen the ones that everybody's going to be talking about, the home run makers that bought puts and in high implied volatility and still made money. I'm not going to let that change my rules. I'm going to continue with what got me here, what's sustained my lifestyle for 25 years, and I'm not going to change it because of 1 week of a correction. Got it? So stick with the rules, stay with the jabs, stay with the punches, don't go for the roundhouses, uppercuts, jabs, body blows. That's what's going to win this fight. All right? That's all I got for you guys today. And if you can't take that, take it easy.